Hello, today is Monday, November 1st, and we wanted to give an update on Tesla. Now, last week, Tesla had the positive lift from news that Hertz was going to buy over 100,000 cars, and traders chose to pile on call options on top of that news, and that leverage really increased the price to an amazing level. You can see here that the stock closed up nearly 20% for the week. In many of our interviews and discussions last week, we talked about volatility in Tesla, and we thought that volatility was going to come down and condense as the week went on. And that is because so many traders were using short-term call options as their weapon of choice. And we thought that the volatility would come in again into Friday night, and that Monday would be a new squeeze. And that appears to be what's happening. As you can see with Monday's chart on your screen here, Tesla is currently up about $57, or roughly 5%. Traders invigorated by the fresh 5 days to expiration on the shortest duration option. In other words, there's a little more value on the shortest dated options. There's a little more juice to squeeze, so to speak. Now, the difference between today's rally, and last Monday's rally is we don't have the catalyst of that big news event, right? Last week brought, I think, a fundamental trader into the game, and when they're buying stock along with traders piling call options on, again, that leverage aspect, that's where you get 10, 15% day. So it's kind of a funny thing. You feel like Tesla's not squeezing today, even though it is up 5%, which is a material return, especially on a day when the S&P is actually flat to slightly lower. Again, today we are getting that squeeze that we called for last week. So far today, we have around 1.1 million call options trading. And if we flip over to our equity hub, we can compare that versus the volume last week. So the equity hub gives you all the key options levels for over 3,000 different instruments. But let's scroll down here and we just type in Tesla. And you can see there's a few interesting points here. We're going to use the history function as we think it's kind of the most convenient way to show what is exactly happening at this moment. But basically, we had a lot of open interest moving last week at the 1,000 strike. 1,000 is still the largest call open interest line. So there's a bunch of deep in the money calls at this moment. And we suspect that these are a lot of long positions, actually. And this should help support the stock as long as it goes higher. It's a negative gamma position for market makers and dealers. And so as the stock goes up, we think they'll probably have to keep buying. There are likely a lot of out of the money call positions. So think at 12 or 1300 strike that are short, right? So there's sort of a call spread we think that market makers are positioned in. And we think those out of the money calls, there's a fair amount of shorts there because of the fact that implied vol was pretty high last week, and some traders want to take advantage of that elevated volatility to sell some call options. The other thing to note here is that the call volume on Friday was very, very low compared to the rest of the week. Obviously, Monday we had that record volume of 2.4 million contracts, and then each day sort of declined. And then there was this thud on Friday of not much volume taking place at all. The stock really did very little on Friday. This is Friday's price movement. We just kind of pinned the 1100 area. And again, we brought up the 1100 strike because it was the biggest gamma area on Friday. That is where the stock pinned. And then we start this week with the 1100 again, sort of as a support in this case now, with a lot of gamma tied to that level. As we mentioned just earlier, today we have 1.1 million calls, almost 1.2 million calls trading today. So that volume built again. And we think that we're going to have volatility on Monday and Tuesday, and then the decay is going to kick in a little bit more. We think that the major squeeze is probably over at this point. Unless some more news comes out that is a catalyst to get new traders invigorated. The stock has had a 20 or 25% run now in a little over 6 days. And so some consolidation is probably warranted. In that case, we would look for 1100 as a support area. The way that we think this plays out is we have the Monday, Tuesday sort of positive price action. We're going to get some call decay, especially on these short-term options as we march towards Friday. So again, Wednesday through Friday will be lower volatility, probably some price consolidation with 1100 as major support. If we flip back to the price chart, you can see again that 1100 is about 5% below where the market is currently trading. 1200 is the strike which has the most volume so far today for the November 5th expiration. So far we see 130,000 contracts, which is quite a bit trading at that 1200 strike. That is clearly where the short-term traders are focused on. However, again, as we sort of march through the week, those calls start to deteriorate. We've already had so much movement in Tesla that as a function of time, as we march into Wednesday, the call decay is probably going to pick up. Volatility will come in, and we think that Tesla will likely consolidate somewhere just above the 1100 price point into Friday. We hope you found this video helpful. If you have any questions, please leave them in the comments section below. You can hit us up at SpotGamma on Twitter. And don't forget to try out a free 5-day trial of our SpotGamma Equity Hub service at spotgamma.com.